someone gets your name,
Mm-hmm.
they come in, and you and I have talked about this in the past. They come in and the transaction's already complete. They didn't have time, they didn't have interest, they were concentrating on it. What is the triage, Andrea? What do you got to do urgently, and what can you kind of set aside for later? How do you do something post deal?
Well, first thing I do is look at whoever their advisors were and shame them in my brain. Like, just come on, man, how'd you miss this? But I say that, keep it to myself, and I just hold on to it. So the next thing is, there's not a lot. I mean, there's the best thing. Usually these are income tax issues, right? So the first, I would say two things, right? One is get the CPA involved, right? And say, okay, what can we do from an income tax perspective, right? Before the next filing to at least manage that, and oftentimes they'll have had a big income tax event that year. And so maybe they are creating a donor advised fund or making a large charitable contribution. It'll be too late to have done a charitable remainder trust, but it doesn't mean there isn't other ways to mitigate the income tax. And then maybe look at the wealth advisor and say, Mike, you'd never miss this, I know, but with your clients, but look at the wealth advisor, say, is there any loss harvesting we can do? Like, is there anything we can do to mitigate the income tax, right? So that would be number one. And that's usually their most pressing issue. And then if they really had a big position where they came out and they have quite a lot where an estate tax issue is still there, then what I'm going to say is, let's create a way now over the long term to we missed a big planning opportunity, but that's okay. There's no such thing as just one bite of the apple. Let's try to do sort of a slow and steady plan year over year to try to take some air out of that balloon from an estate tax perspective. So maybe set up some irrevocable trust and use different types of gifting, maybe some life insurance. Let's commit to meeting them annually to kind of reevaluate and do things slow and steady. And that'll sort of be the medicine of like, see, you missed out. You would, if you had a good long-term advising relationship before this, you wouldn't have missed this, right? Because your wealth advisor, who's usually the quarterback, would have found out about this a long time ago and would have said, you needed to go see Andrea or whoever. Now you know that you need a long-term advising relationship with a wealth advisor who's going to keep you on track. And now the prescription is you have to come see me every year so we can kind of talk about how we do some long-term mitigation. So there's no way to like fix what, go back and fix it necessarily other than the income tax filing. But let's now grow up. You're an adult now. And now you're somebody who needs to have a team of advisors that you meet with regularly. And I think that's the big takeaway.
Yeah.
Gotcha.
I have just one final question for you, Andrea, and then we'll let you go. What would that core team look like? Who is on that team of people who have advisors that people need?
In my experience, it's almost always the wealth advisor and the CPA are kind of the people who are the top. And, usually, it could be both of them together, or sometimes it's the wealth advisor who kind of has more touches with the clients. Sometimes that's a CPA, but those are the client's two most important advisors that they're meeting with quarterly or semi-annually or whatever. Then there's, someone like me, an estate planning attorney who's doing more tax planning side, not just a basic trust, or will person. Life insurance professional is sometimes involved as well if the wealth advisor isn't also that. And then it really depends on, do they also need an actual tax attorney for other purposes? But often it's the wealth advisor, financial advisor, whatever you want to call it, and CPA, estate planning attorney, who are the big ones.